Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Monday, May the 17th, 2010. Is it time to buy stocks? Let's look at the charts. Last Friday, we told you that the selling that happened here on that Friday was not going to be the bottom simply because it wasn't a hammer formation, so you knew that it would actually go lower on Monday, and that's exactly what happened. And now we've formed a hammer formation, and some people might be looking at that saying, well, it must be time to buy stocks now. The answer is I don't think so. No way, not going to happen, never. You see this gap down here, still unfilled? Yeah, that's premature. It's too early. There's a gap down here that has to be filled. This is not a really good buy opportunity. We're going to show you more charts, and we're going to go into the fundamentals of why you actually want to short everything above this level right here. We'll show you why in a minute, but for now, let's just look at the basics here. Buy volume today. Let's look at that. Still very weak compared to the selling that has happened. It's less than the average daily volume, and nothing actually bullish about that condition. Still have a widening or spreading apart of these two moving averages of the MACD, and don't want to be looking at that in any way, shape, or form. I also like to bring your attention to the RSI indicator. Now, the RSI indicator is my favorite indicator. It's the strongest, most powerful indicator we monitor. And it doesn't signal very often, but when it does, it becomes something that you want to pay attention to. And right here, you'll notice that you've got a low point here and an even lower point right here. And these points coincide with the low points on your chart. So let's go back up here a little bit and have a little look at that. You'll see the low point here, the low point here. Now on the chart, the low points are consecutively higher, okay, on the price activity. They move from low point of 2100 to a low point of 2185. That's moving higher, okay? That may look bullish, but the RSI is actually the one we want to trust, and that one has gone from above the 30 line to below the 30 line. That tells you there's a downtrend, and that tells us that 2100 is now no longer support. We will actually break below 2100 on the NASDAQ, so definitely don't want to be buying that, not here and now. Let's look at the Dow Jones Industrial Average. This is the Dow Jones chart, 6 month, each one of these candlesticks being 1 day. Here we have the same hammer formation, looking like a potential turnaround, but it's not right. The gap still never got filled. It's down here. It's not as obvious on this chart, but there's a gap right down here, and it has to be filled. So yeah, I'd stay away from that idea of being long. I mean, you can go up a day or two. I'm not arguing that. I'm just saying that in the end result, the major move will be lower, and it will fall below this this level of 9.8 down here. Yeah, you'll fall below that simply because go down and look at that RSI indicator. Same thing we saw on the NASDAQ. We're seeing that RSI indicator trending lower. She's broken the trend, the uptrend into a downtrend, and it's not reflected on the charts yet on the price, but it will. It's called a bearish divergence whenever you see the RSI indicator signaling something that's opposite of the price activity. And that bearish divergence will end up in a sell-off. We told you that same strategy back here. See how we saw this low point, and then we called that top? Yeah. Same thing is going to happen. Your lows started breaking down. You're going to get the same exact result over time. I'm not going to call it like tomorrow we're going to sell off. We might, but it's what they do in here is really not going to matter. They will be down here, plain and simple. Let's look at the S&P 500. The absolute same conditions. The hammer formation still didn't fall low enough to fill the gap. That tells you that this is really not the place you want to be doing your buying at. That gap has got to fill. We told you that when we rallied up here, and it's been accurate. Now you could move higher. That you do have a gap above you, so I'm not arguing that you can't see any upside. I'm just saying it will be short-lived, and you would want to short all of this because we are going to fall below the previous low. Okay, that's indicated by the RSI indicator, which is showing the same story on every single chart we're looking at here. See the low point? All right, let me go ahead and draw that out one time so everybody sees what I'm talking about. Basically, the low points right here, here, and here are going lower. Okay, doing this number. So you want to be trusting the RSI, not the price activity. That's that. Now, let me show you why on the big picture fundamentally you can't go higher anyway. And that's really why I'm shorting fearlessly here, is because of what's going on in Europe and Asia. Let me show you right quick on those charts. This is a 4-year chart of the European Union, or actually it's the FTSE, the London Financial Times, but basically reflects the issues they're having in the European Union with their debt crisis. And here we've had a major downtrend. Let me go ahead and get the right tools out. Here you were in a major downtrend, okay? Then we had a bounce. Okay, this is the major move. This is the minor move, the bounce here. And then you broke that bounce, that uptrend, and started forming inverted hammers again and again. And you're starting to roll over here. Now we know about Greece. Right in here, we know about Greece. We know about Spain. We know about all those problems over there. So what does that mean fundamentally? This rally that we've seen around the world is basically a bunch of governments getting out there, tossing money out, trying to solve these problems, these debt problems, with more debt. When it gets to the point that countries start getting their bailed out, then they have to then do these austerity measures. Basically, stop spending, start raising taxes on their people, cut back on government spending. All these things are not good for a recovery. They are taking money from the system, okay? And that means you're going to have a problem, and it's going to pull you lower. And even if you argue, no, it won't pull us lower because I have a magic whatever, you can't go higher based on that. Not here, not now. And the problems are just starting to come out. So there's no way to say that this is, a place to be buying. In fact, I would short anything above this line here and here between these 2 points. That's a fearless 100% easy short. And that's where I would be doing that. You see, also, if you go look at, hang on a second. This is the chart of Asia, the Hong Kong index, Hang Seng. Each one of these candlesticks being 1 week. This is a 4-year chart, and we know that they've been rolling over, okay, for the past few months. You'll notice the high points are successfully lower, low points are starting to trend lower. It's starting to roll over here, and we know that they've already come out and said they're seeing inflation increasing there, so they're going to have to raise their interest rates. That's going to also put pressure on their economy, and raises the payments people have to make on their credit, and so forth and so on. So that's not bullish in any way, shape, or form. So when you've got 3 major players in the world, you've got China, you've got European Union, you've got the U.S., and 2 of the 3 are already pulling back and going fundamentally lower. You have to question the U.S., and we already know the U.S. has its own list of problems, including California, which is needing to bail out. There are Greece today. So yeah, we have way too many issues out there to just say, oh, we're going to go buy stock today because it made a hammer formation. There's just not enough support for that. I'm not going to do that. I would stay short 100% fearlessly. You can get all these charts on our free website at perfectstockalert.com. All my annotations are on them. And you definitely want to be monitoring these world markets, as they do show up and they do affect the U.S. You had a major sell-off and a bounce higher here, but you failed to break out of the key resistance, and that tells you it's nothing more than a bounce thus far. You could and this is your minor trend, this is your major trend right down here. So I would stay short this market right here and right now. Had a really nice run. I would pocket that and start shorting until the trend reverses. We have to stay short. Plain and simple. Let's look at our disclaimer. As always, the information provided here is our opinion only. You can read. If you haven't been to our website at perfectstockalert.com, go there. It's 100% free. Check out what's in my portfolio. Learn all kinds of cool stuff there. All we ask that you refer a friend. God bless. Enjoy the evening, and I'll see you all tomorrow.